This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello, everybody, and welcome back to another episode of Breaking Banks Europe. I am Francesca Liverti, and today I will be your host. So in this episode, we are going to discuss about fintech ecosystems and how to successfully build them. So I've spent myself 5 years building up Holland FinTech together with Don Gamser in the Netherlands, and I have a kind of a feeling of the complexity that there is around that. But I'm also very happy that today I have here with me 3 exceptional guests that will help us navigate this topic. So without any further ado, let me introduce you our guests. We have Matthew Gamser, CEO of SME Finance Forum. Hi, Matt. Very happy to have you here.
Great to be here.
Nice. And then we also have Isio Nelson, Head of Client Engagement at BAI. Hello, Isio. Thanks for joining us.
Good morning. Great to be here.
And last but definitely not least, Rodrigo Garcia de la Cruz, CEO of the Spanish startup Finnovating. Welcome, Rodrigo.
Thank you very much for the invitation.
Thanks. So guys, before starting, I'd like you to share a little bit more with our audience what your organization are doing and what makes you an ecosystem builder. Matt, do you want to start?
Sure. So the SME Finance Forum was created by the G20 countries as a center for knowledge exchange, networking, and public-private dialogue to work on improving the access to finance that small businesses around the world would like to have. It's managed by the International Finance Corporation, which is the private sector arm of the World Bank, where I've worked for the last 17 plus years. And I guess you could say we were founded to be an ecosystem builder because the G20 recognized that there are a lot of obstacles to improving the services that small businesses get from the financial sector. They recognize that creating a way to bring people together, to help people learn from each other, link to new business and partnership opportunities, and to lead an industry more constructive dialogue with policymakers might be useful. And so over the last 6+ years, we've been building a global network. So we're not a national ecosystem builder, we're a global ecosystem builder of, trying to bring together banks, fintechs, non-bank financial institutions, development banks, tech companies, and you name it. Anyone who's got a stake in giving SMEs access to finance or providing services to companies that are trying to finance SMEs. That's our ecosystem, and we are seeing the power of growing it because we started with about 80 institutions in the first year, and now we're over 200 members.
Wow, that's impressive. Thanks, Matt. Isio, tell us about BAI.
Great. Yeah. And BAI, we're a nonprofit independent organization. We've been enabling leaders from the financial services ecosystem for almost 100 years now. And this has evolved throughout the years and different things that we do to help the industry. It includes banks, credit unions, fintechs, non-banks. And our mission is to give financial service leaders the confidence to make smart decisions every day. We do that through a lot of different ways that we bring the communities together. We do it through roundtables, we do it through research, and we do it through thought leadership. And so really bringing that community together, helping to solve problems, to create the overall industry, kind of making sure that all boats are rising, and sharing best practices. And what I do on the research side is we help with providing syndicated research, comparative analytics, so that FIs can understand how they're doing and where their strategies are playing out and what they need to do to change.
Great. And Matt said that he has a more a global focus, of course. Do you have a specific geographical one or as well much more global?
Yeah, it's a good question. We do mostly in the US here as far as some of our comparative analytics, but I think a lot of the things that we've done to build that up over years are applicable from a global perspective. And then BAI overall, we actually do a lot of the Global Innovation Awards. We're actually about to be putting those out in August here. So we do have a global reach from that perspective, but the research into consortium base that we do right now is concentrated in the US.
Great. Rodrigo, your turn.
So let me start telling a little bit about my track record, because I've been working in the banking industry for more than 15 years in banks like Citibank, Barclays, or Santander. And I realized that something has happened in terms of the technology and the new digital business models that are coming to the sector. And this is why almost 12 years ago, I decided to jump into the fintech ocean to try to understand how to help these both sides of the financial sector. So during these past years, I had the opportunity on one side to create a huge community of CEOs of fintechs in Latin and Europe with more than 3,000 fintechs, and also was one of the founders of the Ibero-American and the European FinTech alliances of associations, and also the founder and the president of the Spanish FinTech Association, gathering more than 40 countries in terms of FinTech hubs. And also I was trying and I was connecting banks with FinTechs or with the FinTech solutions in order to accelerate the digital transformation. But I realized that it wasn't enough. So I decided to found Finnovating, and this is why we create a digital global space in order to accelerate the connections and the collaboration between both industries. And this is why we launched Finnovating less than a year ago, and the first B2B matching as a service platform, all digital, that connects, today we are connecting 60,000 fintech solutions in the world, also insurtechs and regtechs, with banks, with insurance companies, with all kinds of companies that are trying to reinvent the way they are doing open innovation, and we are connecting and helping to invest and doing business worldwide. Today we have fintech companies active in the platform from more than 130 countries, and we are creating something that I think is very, very neat in the market today.
Great. So three real matchmaker, I would say, definitely. So, but let's start first a little bit doing some stakeholder mapping, and I'd like to start with you, Isio. I have a look at one of the latest works that the BAI directed through Vantage Partners to map out the fintech and banking ecosystem. And would you like maybe to give us a little bit your general perspective of the state of the things and what you have found out in that research?
Yeah, thank you. Yeah, one of the things that we want to do is really to understand the lexicon, because there isn't a common lexicon in the US or globally. Everybody kind of has their different perception of what the FinTech ecosystem is or is not. And so we wanted to start to map that out and understand how can we have some common ways when we talk about things. And it's extremely complex. There's a wide variety of participants. So the way we framed the ecosystem in our approach was to look at really three primary participants and then go from there. We looked at financial providers, enablers, and then non-finance distributors. And even within the financial providers, we broke that down into two different types of financial providers. Those that are self-sufficient providers, providing products direct to consumers or through a channel partner. That's the traditional banks, the credit unions, and those that compete against the traditional banks and credit unions like the licensed native fintech banks like SoFi. And then we have enabled providers, and these are entities that provide a partner bank's products directly to consumers. The bank provides the license or platform and enables the provider, originates and often services the consumer. So that's how we looked at the financial providers. The enablers then are the providers that provide technology, the data and tools that enable the industry. And they also sell to and through these enabled financial providers. And then those non-finance distributors, those are participants from outside the financial services industry that distribute products within the value chain, like Starbucks or Ubers or the airlines. And they partner with both traditional and fintechs to provide those underlying products. So once we started to frame that out, then you start to see how they all work together. You know, a lot of people talk about them competing or trying to put each other out of business, but often we find that they're actually enabling each other throughout the ecosystem. Like any good ecosystem, like you would find on a farm, you find different pieces that help each other out and make it all work. And so, in other words, we're seeing, you know, a lot of the fintech are starting to go into areas that are niche and they find opportunities that have been not provided by the larger providers in the past. Maybe they've got new technology that they don't have to worry about some of the infrastructure challenges that the legacy providers have. And so they start to be able to cultivate that and understand their needs. But they also then depend on a lot of the regulatory and other type of developed solutions that have been in there in the marketplace. So it's no longer just a competing, it's much more of a cooperation, co-opetition type of environment that we're seeing.
Yeah, you touch base on some very interesting words like competition, collaboration, of course, and we will deep dive a little bit more into that later in our conversation. But before, I want to ask Matt another question about especially the SME finance environment. You, of course, have a strong experience in that, and we can define the SME, allow me to say, as a special category, probably, that is not always taken into great consideration by big financial institutions, I would say, despite being the actual economic engine of many countries, honestly. So according to your experience, which is the role of fintech within the SME finance, and how do you position SME in the ecosystem, the fintech ecosystem itself?
Well, I'm very glad you asked that. If you had asked me a few years ago, I would have said SME is not a big thing for the fintech universe because, and really it is changing, and I'll talk about why it's changing. But you know, for the most part, and I say this as someone who's spent his career, you know, more than 4 decades working on mostly issues in emerging market countries and places where exclusion from the financial sector is more common than inclusion in the financial sector. Most fintech has in its early days up until fairly recently has been chasing how to provide even more services for people that have lots of services already and very marginally improve the way they're served. SMEs have always been left out of this. Even before there were fintech, the dirty little secret of bankers is that, of course, no one could say that they didn't like SMEs, but no one had a good recipe for making money off them as clients. And so you said all the nice things, but in practice, you tried to avoid the market as much as you could. And I think that we are really approaching a sea change in that, both from the fintech. If the fintechs are seeing demand, and we're seeing more and more fintechs looking at this space as a real area of opportunity, whether they're working in developed markets or emerging markets. And at the same time, we're seeing, because of the technological possibility they're bringing, in particular because of the acceleration of the general digitalization and the boost that COVID and movement restrictions gave that's really, really powered a universe that wasn't available in SME financing before and now is growing rapidly, and folks are starting to harness it. I don't want to overstate where we are because I think we still have many, many challenges, and there's trillions of dollars of business on the table, and there's even more trillions of dollars of SME receivables that are bottled up in really inefficient payments supply chain systems. So we have a long way to go. But I really do think we've turned a corner in the 2020s from where we've been for as the rest of my career.
That's quite interesting. Thanks, Matt. And let's now deep dive a little bit more into the banks that we were mentioning quite a lot in this initial conversation. You, Rodrigo, mentioned, of course, your background in Citibank, Santander. So you have quite an experience in that. And of course, you are all supporting very much the connection between fintechs and incumbents. But what do you think, Rodrigo, is the status right now of this relationship between incumbents, especially banks, and fintechs?
So I think it has been a very, very interesting trip. If we see, for example, the last 10 years, I would say that we can say about two different phases. The first phase, probably the first 5 years of the collaboration, I think it was more marketing and even theater than the real projects, what the corporations, the incumbents want to do with the fintechs. They see like sometimes even exotic to work and to talk and to do things with these kind of new solutions.
Like the innovation label attached to that.
Absolutely. It's like a check. We are doing things about innovation. And we can see a lot of CEOs of big corporations saying that they are having, the incubators, the accelerators, or the innovation programs, saying that they are doing things with this new kind of players of the block. So it was the first 5 years, and I think it was very expensive for some of them, and with not a lot of big successes in terms of business. However, in the last 5 years, I see even with after the pandemic, a need of collaboration, because most of these corporations and even the SMEs, they need to collaborate with the new solutions, with the new embedded solutions, with the software solutions, with the SaaS solutions that the fintechs or even insurtechs are providing to the ecosystem, to the whole ecosystem. So the last 5 years has changed a lot, and I see how many corporations are starting to create departments or even innovation or tech departments looking for the best solutions to work with. And most of them are starting from the business side, from the business units. And I think this is one of the most important things. We need to help from the fintech industry to the business units, because with that is going to help for this growth. So what I'm seeing is that probably in the next 5 years, we are going to see much more collaborations. In fact, we have some reports inside that we see a massive raising of collaboration up to 27 times up to 2025 from the pandemic. So we are going to see a lot of companies, a lot of SMEs working, collaborating, and using the fintech solutions, because it's the only way to scale the innovation and to scale the efficiency of the companies.
Thanks, Rodrigo. So more a sort of problem solution kind of approach, like the business unit is discovering they have a problem and they look exactly for the solution that they need, if I understood correctly.
Absolutely. So that's the point.
And I was going to say that's very consistent with what I was describing earlier, that I have no problem understanding why Rodrigo feels a lot of the initial collaboration of banks and fintechs was all show, because they were trying, even if they were semi-sincere, they were targeting the well-served elite clients of the bank and trying to impress them. And there wasn't much more margin there anyway. So there wasn't going to be a lot of return. Now they're focusing on real areas where there are demand-supply gaps. And from a business point of view, that's where there is real return. And so you have to be much more serious in your partnership if you're looking at these things from, in terms of let's really expand our markets and not just try to capture a marginal additional share of well-served markets already. And this is what this is why fintechs are going to be so important going forward, but maybe why they were overhyped in the beginning, because they were working in the wrong areas where they didn't make as much of a difference.
Absolutely. And let me answer your opinion, because I absolutely agree with that. In fact, during the first 5 years, only 30% of the companies were B2B of the fintechs, and now have changed. 70% of them are B2B. So this is why even the own fintechs learn and change their maturity in order to be better providers of the financial industry. So this is not only the problem of the big corporations, it was also the problem of the maturity and the focus of the first fintechs that we saw in the market.
Definitely, it's kind probably of a miscommunication. Of course, we have to think that there are two different words connecting. So definitely they need probably a little bit of time to get to the actual maturity they need to talk profitably with each other. So double clicking on that, let's say then that finance then is becoming more an ecosystem overall, and each bank has sort of create a real community to provide, as you said, efficient services, much more efficient services. Some people are saying, of course, about open banking, others call it open finance, and innovation. Regulators are pushing definitely for a more open banking system. So considering all this that we already said, do you think it's already leading to a real, and I'm saying real, underlying banking communities, or which steps do you think are still needed to reach the goal? It's a question for everybody.
Well, look, I will tell you that it's not uniform around the world. You have markets where the regulators have made things reasonably open in terms of access, whether it's access to data, whether it's the access to the right to offer different financial services. And then you have other regimes where licensing and regulation are very restrictive. The countries are trying to structure who can provide what services when. And then you have countries like China that were one way and are now going almost the opposite direction. So it's what we can say, I think, maybe I'll be labeled a more labeled politically for this, but I think that the more open and competitive environments that are allowed, where there's less fuss about who can get a license to do this financial service and that financial service, they seem to be the ones that are more conducive to having fintechs grow and play a bigger role in and helping the financial sector evolve more rapidly to serve. I think certainly the incredible inclusion progress that was made in China was possible because of an enabling attitude of a government that we don't often look on as enabling from a Western point of view, but they were very enabling of innovators in the financial space. And if they hadn't been, you would still find hundreds of millions of Chinese without access to basic bank accounts, much less the other incredible products and service they get from the likes today of Baidu, Tencent, and Alibaba affiliates. So the world is a very diverse place. Policymakers are not of one mind about how to support this, but I think we can see enabling ones. And if I was looking at who I think are some of the most enabling today, I would not point to Western economies. I would point to places like Singapore and India right now, where they're not only being very open and open-minded about who can compete for what, but they're also investing in infrastructure, core infrastructure that provides a base for everyone, which lowers the cost of innovation.
Yeah, and definitely you mentioned Singapore, and regarding FinTech ecosystem, it's definitely one of the gems of innovation activity, for sure. Isio, do you have any opinion around this?
Yeah, so I think the banking communities rally, and you use the word enablers, Matt, but whether it's impetus or enablers or some type of action that's going on, whether it's regulatory action or if there's obviously, COVID was a big thing that allowed the banking community to rally together in a common interest to be able to provide, answers to what they needed to. So We did that, through roundtables. PPP was a big thing here in the U.S. We got the groups together that were trying to figure this out in a short amount of time, and they worked together to be able to address a big need that was going on in the industry. We see it with regulatory approach, a lot of standards that are needed in the industry to be able to share information amongst each other. And so it's these impetuses that have a real ability to rally these communities together. Now, with that said, you have to have almost a forum already created to be able to have people that know where to come together, how to facilitate conversation, what to exchange, and how to prioritize where it is that they need to create these communities and solve problems or help with the opportunities. We actually look at some key elements of doing that. So we've got different ways for consortiums where we have give-gets and the roundtables we talked about. We like to use the term alert, agnostic, listen, expectations, relevance, and trust. You need to have an agnostic community that has an intermediary, somebody that cannot take sides, but can help structure the community and facilitate the conversation without a biased interest to be able to really go ahead and take the common things together, whether that's regulatory or technology or standardization. Listening, making sure we're listening to those communities and not just trying to push a synthesized agenda. Setting the right expectations about give to get and make sure that it's not a lopsided value for one participant versus the others, and making sure that they're all getting value, otherwise it's not sustainable or scalable. And then relevance, making sure that the information that is going through is shared and is specific to the groups that are trying to, because these banks are not, and fintechs, they're not monolithic. There's specific personas within each of them that are trying to solve specific things. And so you need to continue to make sure there's relevance specific to them. And of course, the trust factor, right? I mean, they have to have trust that amongst each other, they're not stealing each other's ideas, that they're doing things in a way that they can be open and have discussions, again, that are better for the overall industry. So a lot of the impetus has got to be there for them to come together, but you also have to have a place for them to know where they can come together, feel safe about getting and working together, and then continuing that community that serves the entire industry.
Thanks. So we are just pausing for a very short break, and we will be back in a minute.
The FTS Group builds innovation ecosystems. We engage incumbents, investors, entrepreneurs, technology partners, and regulators to build trusted and connected fintech tribes around the world. We firmly believe that innovation in financial services will truly improve people's lives. Learn more on ftsgroup.eu.
And we are back at Breaking Banks Europe, together with our guests talking about fintech ecosystems. And we were just discussing about the banking community as a whole, touch base also on different geographies together with our guests. And before that, we also touch upon something that I really want to discuss a little bit more with you guys. So we said that banks, they need to face the fact that they need to offer much better services because the consumers are demanding for that. And therefore, the collaboration and not, as Rodrigo was mentioning, only the marketing and label innovation is required. So my question to you all, it's really about the consumer. So banking, as we said, is becoming more an ecosystem thing, with the consumers having an access to a wide range of services. So what are the implications for consumers when we talk about this all open banking system? There are all benefits, you think, or there is a dark side on that?
If I could weigh in here and I want to build on a point that Isio made, a very important point, that banks too are a very diverse group. And I know we're talking about Breaking Banks Europe, and I'll get to Europe in a second, but if you look in the US, we have about 7,000 or so banks, and we had 14,000 back in 1990 when I started looking at this. And it's not the big ones that are going away. It's the littler ones. And they were historically the ones that were closer to customers. And we've had some good counter forces lately, especially in response to COVID. If we look at the Paycheck Protection Program in the US, when the US first rolled that out, of course, the big banks were the only ones who had the relations with the Treasury and the Small Business Administration. They got in, and then there was bad publicity. They were giving a lot of loans to Hilton Hotels and American Airlines. And I don't mean US Airlines, I mean American Airlines Corporation. And people said, that's not small business. That's not what this program is for. So the government did a very clever thing. They reached out to the fintech community and said, we need you in this program too. And what happened was a double game, because some fintechs responded directly, but other fintechs made partnerships, and it was with the smaller and medium-sized banks. And we saw some great examples of really concrete ways that they could work together to offer these things to the smaller firms in their communities. And Europe is in a slightly different situation, because you really don't have Europe-wide dominant banks, but you still do have pressure from regulators, and the smaller banks are under pressure. And I think in Europe, there is also an opportunity, because you see how fintechs, when they're allowed to play a role, whether it's in the way the British government enabled fintechs a bit later on in their recovery program, or other governments, they've been able to work both directly and with financial institutions to do more for more people. But they don't tend to work with the top by asset size banks. They tend to work with the smaller ones, which I like, because it prevents you having a situation that you have in markets like, at least up until recently, the UK, Australia, Canada. They tend to be Anglophone countries where you have very few banks controlling all the market. And there's no incentive to innovate then. And they get into this model where 5% of your customers pay for the other 95%. And there's no way you're going to get good service when that's your situation. So we really should be pushing for more open situations where you can't monopolize the data on the transactions as a big bank. You let the fintechs, you let the other banks with customer consent have access to this, and you stimulate a more competitive market than we've been developing over the last few decades in the global financial sector.
Yes, that's very, very interesting what Matt has mentioned about the differentiation depending on the region that you are thinking of. For example, Europe, that probably has been one of the leaders in terms of open banking, PSD2, trying to accelerate the competition between banks and helping fintechs to growth and to use the data from the customers, because at the end the data are from the customers, are not for the banks, but has been a very, very complex trip in order to deploy PSD2 and to help the fintechs to use the data of the fintechs, or other banks to use the data of the customers. At the end, the clients, doesn't matter if they are working sometimes with a bank, a small bank, or a fintech, they need solutions. So they need banking solutions, but probably they are not thinking about if there is a bank or whatever. However, that's very important to think about the implications of having an open banking law or framework that, for example, other countries are using, like, for example, Latin America, that is allowing to develop a lot of new solutions to help not only banks, but also other fintechs. These kind of companies that are seeing that Europe, for example, is a very competitive market, they are changing from B2C to B2B businesses in order to use also this business to go through another regions that are probably less competitive in terms of the number of banks or the number of competitors, like, for example, Asia, or, for example, Latin America. So there is an important, flow of new companies and new solutions using the data and using the solutions to help other fintechs or other banks in other regions. So at the end, I think PSD2 is also helping, and the open banking is helping to develop not only Europe, but also another regions in the world.
And thinking about that, I would like to add another element to the discussion, including a topic that we hear a lot lately, which is embedded finance. And of course, how the non-financial players like, I don't know, for example, Booking.com or others are entering in the fintech field. Because at the end, as you said, the consumer doesn't care from who the service is coming, but they want a seamless and an efficient kind of experience. So all in one solution, let's put it like that. So what role do you think these companies are playing within the ecosystem we are talking about?
I think this gets to what you and Isio were talking about earlier about just how complex the fintech universe is. I mean, I would almost argue that we in IFC used to talk about we have the financial sector and we have the real sector. And the real sector, it makes things, it provides services, and the financial sector does financing. I'm not sure that distinction holds up anymore. When you find logistics companies like Maersk or TNT or FedEx offering all these financial services to buyers and sellers, when you have Facebook, Amazon, Alibaba, Tencent, doing all these financial services, Grab, Mercado Libre, Jumia, all. What's a real sector company? What's the financial sector company nowadays? It's because, as you said, the consumer wants it all in one space. They don't want to have to, they're getting more and more used to electronic commerce, to internet-based commerce, and they want to have that one environment where they can do everything they want. They want to find what they want to get. They want to pay for it. They want to insure it. They want to arrange the transport. And this is the essence of what sometimes gets called embedded finance, which is wrong because it's not about finance being embedded in something else. It's about everything being embedded in everything else. And people want a one platform to offer the full experience. And this is really, really exciting, especially from the small business point of view, because we always had this conundrum because, look, I've defended small business and the crappy treatment they got from banks, but a lot of small businesses were in terrible shape. And that's why the bankers didn't want to deal with them. But it was because they didn't only have bad finances, they had bad management and they didn't have control of their markets. They didn't know their customers and their suppliers. Now these platforms, we couldn't do all that before we had digital. We said, you can't do that. You got to specialize in finance. If you're going to be good at small business, just do finance. Forget the rest. Today, we give 100% opposite advice. You want to be competitive? Try to do it
Open
all.
up.
Find a way to be partners with other people. Offer the full range. And whether you start from the real sector or the financial sector, offer it all through partnerships on your own, whatever works.
And I think you hit on a good point, Matt. I mean, a lot of it, the big word there is friction, right? So if you can reduce friction, and before we had literally geographical or different boundaries that prevented us from being able to eliminate that friction until a lot of the digital came along that reduced that. They put oil in there to be able to allow us to be able to do things that we just couldn't before because you had to drive down to somewhere or you had to go and do something separate. But now if we can reduce that, and I don't have to worry about, getting something done before I go buy a car or buy a coffee or, Uber obviously was the big one where you got out of the cab. You didn't have to worry about all the, paying with cash or paying with your credit card. All that stuff just made it so easy. And so it's that customer experience that's come out and that everybody expects across the board now. And of course, on the retailer side or on the real side, as you said, it all has to do with what was my abandonment? What was I losing before? Who was walking out the door, not completing their transaction because there was too much friction involved? And so all of this does is it continues to be able to, if you can delight that customer, if you can reduce the friction by introducing ways that are seamless, then everybody's winning. In order to be able to, delight that customer, which is ultimately the buyer that is fueling everything.
Yeah. Let me advance you some figures of our Finnovating platform that during the last six months, what kind of collaborations are between corporations and fintechs, and we can see, for example, that 70% of them has been closed by banks, 50% by insurance companies, 8% by tech companies or the data corporates, and 5% real estate, 2% telcos and mobility. So what we can see is that the banks started this collaboration with these solutions, but on the other side, insurance companies, tech data, real estate, telcos are also using these solutions. And when we see what kind of fintechs they are looking for, most of them, more than 30% of them, are embedded solutions, are SaaS solutions, are open banking solutions that they are looking for to embed at the end into their businesses. What is going to happen in the next years is the time for SMEs and for the tier 2 and tier 3 banks and insurance companies, because all of them, they are going to need to incorporate these SaaS or embedded solutions, but also think about any kind of company are going to use fintech solutions or finance solutions like payroll advance, like expenses management, or e-commerce funding or financing. So at the end, every kind of company, doesn't matter, every single company is going to use fintech or finance embedded solutions. And that's the magic of the fintech sector, that is not only the digitalization of the traditional banking industry, is for every single company in the world.
I don't remember who was saying that every company can be a fintech company then.
That's right.
Well, yeah, finance will be in everything. And look, Europe is actually, I mean, people bash Europe for a lot of reasons, but I would say that Europe's actually sitting in a fairly encouraging position right now because of PSD2, because of SEPA, your unified payment system. This is something we haven't really talked about. At the core of all this, whether we're delivering finance to consumers, to businesses, whatever, the core information is about the in and out transactions and having as close to real-time access to that so you can understand the risks and opportunities. And the trouble is, forget groups of countries. In most countries, you don't have interoperable systems, so you can't get at a complete 360-degree picture. But in Europe, with SEPA, we're moving in the right direction. And if you then couple that with rules that, all right, they're going to be teething problems making PSD2 work. There always are in Europe. But if you can make it work and you have those two components, and then you combine that with another initiative that at least is based in Europe, it's based in Switzerland, the legal entity identifier standard, which the Bank for International Settlements is trying to develop. I think it originally started in Germany, so I want to give Europe credit for
credit
this.
to everybody,
and the European Union credit for this. And you combine all those things so you have really strong ID. You also need that for consumers, but I don't really want to wade into that space. And you have real-time transactions out there and available with customer consent. Then the sky's the limit about where fintechs and banks and others can work together to create this ideal frictionless environment that Isio described. But where you put roadblocks to that, then there are going to be people who are the people, at least in my line of work, we're most concerned about: women, minorities, displaced people, rural people. They're going to lose out because they've historically lost out because they've been off the radar with respect to access to critical information.
Yeah. And you mentioned that, Matt, and I just want to add that because I know you are working a lot with emerging markets, but many times it's not really, we think about emerging markets so far away, but actually underserved people are also in Europe. So we do have quite some work to do in that sense as well. All right, guys, I'm sorry to cut the conversation at this point, but the time we have it's quite short. So I do have one very last question for you all before closing up this episode. And I would be very happy if you can share with our audience where can we find more information about your organization, and if there is any particular news you want to share, or maybe something interesting that it's coming up soon. Matt, I think you have something coming up in September, if I'm not wrong.
My subtle virtual background marketing is working, I see.
Yeah.
Not so subtle. You can find out more about the work of the SME Finance Forum through our website at www.smefinanceforum.org. There's a lot of useful publicly available information there. We also do have, as I said earlier, members who are financial sector participants. I want to deliberately use a broad term because it's a very broad group. And members get additional services and access to learning, linking, and leading with each other. And then we have an annual meeting called the Global SME Finance Forum that we've done for the last 6 years, and we're about to do round 7. But most importantly, after 2 years of having to do this virtually, we're returning to having a physical meeting. Thank goodness. Hooray. And we're going to be in Phnom Penh, Cambodia. So yes, we will be in an emerging market country, a very interesting country with respect to financial sector innovation, from the 19th to the 21st of September. And that meeting is open to everyone. Members come for free. Non-members have to pay a small ticket fee. And you can find out more about that on the website reference I gave earlier.
Great. Thanks a lot, Matt. Isio, where can people find out more about BAI and which are your upcoming initiatives?
Great. Yeah, you can find more at bai.org. And out there you can see a lot of our executive roundtables, and we have CMO, CHRO, CFO type of executive roundtables, and some of the participation there. And even just having conversations about what we do here in the U.S. and how that could apply in other countries. We'd be happy to help you there. In regards to some of the things we've got coming up, you'll also see on the website that in our 12th year, we've got our BAI Global Innovation Awards, and that recognizes forward-thinking financial services organizations. And this year, similar to the conversation we just had, we're not limiting it to specific categories. It can be anything financial services related to improving businesses or retail customer relationships, leading organizational changes, and serving communities. And we're also introducing this year a Rising Star Award, which will honor up-and-coming financial services leaders. And so our judges will look for candidates who are innovative and passionate and intellectually curious and making a positive impact on financial services. So if you get a chance, check that out. I think we've got nominations open until August 26th. And so we'd love for you guys to go in and submit your nominations.
Great. Curious to see who is going to win that. Rodrigo.
So very, very easy. Finnovating.com, that all of you are invited to be part of this global and digital community, this matching platform, and join the 60,000 fintechs from more than 130 countries, more than 10,000 corporations and investors that they are looking for companies like you. Or if you're a big bank or a bank or a kind of SME, just a better place to find your potential partner or your company to collaborate, to grow, or even to buy or invest. So very happy to have all of you on board, and we will see you probably in some of the physical events of SME Finance Forum or Goodbye and etc.
Great, Rodrigo. Thanks a lot. So we reached the end of this episode. And of course, I really want to thank my amazing guests. Thanks a lot, guys. And of course, thank you very much to our audience for joining us today. Always remember to follow Breaking Banks Europe on all streaming platforms and, of course, social media. I am Francesca Liverti, and see you all next week. Ciao.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.